Imagine a company that raises $150 million without selling a single product, signing a single customer, or building any real business, and investors still line up. Sounds crazy, right? Welcome to the world of SPACs. But what if this blank check company isn't chasing just any market? It's laser-focused on the fast-growing world of digital assets and blockchain infrastructure. Today, we're diving deep into why Digital Asset Acquisition Corp, ticker symbol DAAQ, could be one of the most interesting SPAC stories of 2025, or why it might crash before it ever takes off. Hey everyone, it's Robert. Welcome back to The Alternative Investor. We dive into the companies and sectors that the mainstream often overlooks, and today's focus is on a new SPACs that could either strike gold or get left in the dust. If you're excited about cutting-edge finance, crypto evolution, or high-risk, high-reward plays, make sure to tap that like button and subscribe, because this is one you'll want to watch closely. What is Digital Asset Acquisition Corp? At its core, DAAQ is a special purpose acquisition company, or SPAC. SPACs exist for one purpose: to raise money, find a private company to merge with, and take it public without the traditional IPO headaches. DAAQ is targeting companies in the digital asset ecosystem, which could include blockchain firms, crypto exchanges, DeFi platforms, digital infrastructure providers, and even NFT-related companies. The company is offering 15 million units at $10 each, raising $150 million through its IPO scheduled for April 29, 2025. Each unit typically includes a share of common stock plus a warrant or partial warrant, giving investors potential upside if a deal is successful. Until a merger is completed, the IPO funds are held in a trust account to protect investors. Here's why DAAQ's focus matters. Despite regulatory uncertainty and recent volatility, the digital asset economy keeps expanding. Crypto adoption among institutions is rising. Blockchain technology is being integrated into banking, supply chains, gaming, and even identity verification systems. This isn't just Bitcoin speculation anymore. Entire industries are being rebuilt on decentralized frameworks. DAAQ is positioning itself to capitalize on that shift. By targeting high-potential digital asset companies that aren't yet public, they aim to bring the next wave of blockchain innovation to public markets and give investors early access to growth that traditional stocks simply can't match. The team behind DAAQ, a SPAC, is only as good as the people leading it, and here's where DAAQ gets interesting. Leading the company are Peter Ort and Jeff Tudor. Peter Ort was previously involved with DAAQ Acquisition Corp, which successfully merged with Circle, the issuer of the USDC stablecoin. That gives him real-world experience in crypto finance at an institutional level. Jeff Tudor, on the other hand, comes from a private equity and investment management background, and he also served as CEO of DAAQ Acquisition Corp. Together they combine crypto domain knowledge with serious capital markets experience. This is not a management team chasing hype. These are operators who understand how to identify value and close complex deals. How DAAQ plans to execute SPACs have a 2-year clock. From the IPO date, they have 24 months to identify a company, complete a merger, and bring that business to public markets. If they fail, they must return the IPO funds to investors, minus some fees. DAAQ plans to leverage its founders' deep connections across fintech, blockchain, and digital finance to find a strong private company ready to scale. Their target could be a mid-sized crypto exchange looking for liquidity, a blockchain infrastructure company building core technologies, a digital payments platform bridging crypto and traditional finance, or even a Web3 gaming company tapping into the next generation of decentralized apps. The focus will likely be on finding a company that already has meaningful revenue and growth traction, not a speculative pre-revenue startup. What makes DAAQ different? Not all SPACs are created equal. The SPACs market was flooded between 2020 and 2022, and many of those deals failed miserably because inexperienced teams overpaid for weak companies. DAAQ has two major advantages. First, they have a very narrow focus. They are not looking at anything and everything. They know the blockchain ecosystem and are staying inside that lane. Second, they have a management team with real-world experience in crypto mergers and high-stakes acquisitions. That dramatically increases their odds of not just finding a target but actually completing a deal that can succeed long-term. Risks and considerations. Now let's be honest, SPAC investing always carries risks. When you invest in a SPAC, you are betting more on the management team than the actual business, because the business usually doesn't exist yet. If DAAQ fails to complete a merger within 2 years, investors get their money back at the original $10 IPO price, plus minimal interest. That is safe, but it also means tying up capital in a deal that may never deliver upside. Regulatory risk is also massive. The SEC is increasingly focused on the crypto and digital asset sectors. Any merger target that DAAQ identifies could suddenly face new compliance hurdles, lawsuits, or even regulatory shutdowns if the political environment shifts. Even if a merger happens, post-merger performance is never guaranteed. The combined company could miss projections, burn through cash, or fail to attract enough investor attention to maintain share price momentum. So let's circle back to the question we opened with. Is DAAQ the SPAC to watch in 2025? The answer depends on your risk appetite. They have a sharp team, a smart target sector, and $150 million ready to deploy in an ecosystem that is growing despite broader market fears. If you believe in the future of digital assets, and you trust experienced operators to find the right opportunity, DAAQ could be an intelligent high-risk, high-reward investment. Now I want to hear from you. Would you invest early in a digital asset SPAC like DAAQ, or would you wait to see who they merge with first? Let me know down in the comments. And if you found this deep dive valuable, hit that like button, subscribe to The Alternative Investor, and I'll see you in the next one.